In today's video, I am going to be breaking down a very amazing stock called Fortis. This is a very interesting company, and it's actually a good future company, even though they have been outperforming over the past many years. Let's get down. Let's check out Fortis. Its ticker is FTS, so let's get down. Let's check them out. So first off, Fortis operates as an electric and gas utility company in Canada, the United States, and Caribbean countries. It generates, transmits, and distributes electricity to approximately 433,000 retail customers in southeastern Arizona, and obviously many other customers as well. Now, why is this actually a futuristic company? Well, as we all know, electricity is going to be a resource that we need. We're going to need more of it. We're going to need more and more infrastructure to be able to handle electric cars and smart grids and a whole bunch of other stuff. The cities are becoming more and more smart. Here in Hamilton, whether you like it or not, I disagree with it, but many other people don't, is we are putting in an LRT, basically a street train. And that's going to take electricity. So companies like Fortis, yes, they're going to need to put out money to be able to fortify the electrical grid. Most of that money is going to be probably coming from the government anyways. And then on top of it all, Fortis is going to be dealing in electricity. Believe me, we're going to be going from a type 0 civilization to a type 1, and we're going to be going through electricity like there is no tomorrow over the next 100 years. This is a solid company if you're looking like 10, 20, 50, or even 100 years into the future. So as it sits right now, one of the biggest factors is its dividend. I'm going to get a little bit further into its dividend later on. However, right now it pays a 3.85% dividend, and its average volume is 1.4 million shares traded every single day. This is actually one of the most solid companies in Canada. In fact, it's a company that has raised its dividend for many years. It's an aristocrat, and on top of it all, it's actually stock prices have been going up. I think the record is like right now at like 8 or 10 or 20 years. Either way, it hasn't had a losing year in many years. Its PE ratio, when you compare it to others in its sector, is around average, and if we look at its max chart on Yahoo from the earliest date, which it goes back way earlier than this, but this is just the size of the chart that Yahoo's willing to give you, it was well under $10, and now 20 years later, it is 5 times higher, plus it pays a dividend. Also, if we look at the actual lines that are on here, it's actually at the higher end. So if we actually make a line down like this, we can see that it has actually broken out past its long-term trend line and has actually broke above. So this may be a brand new trend line that it's starting right now. And if we look at the 5-year chart, again, it looks absolutely amazing. This was the initial downturn when it came to COVID, and then it recovered and then dipped a bit more, and now it's back up to basically where it was playing before the pandemic. Now, is this a great time to invest? Well, it has had a recent pullback, and it's bounced off that $50 to $5 price a couple of times, and it's also basically a level of support because we can see that line, it's bounced off of it a few times here, and now it's above that trend line, which means that is basically the new support. So the new support is around $55. It's pulled back from a little over 57, so it seems to be a very strong buy right now in my books. And if we look all the way back to 1995, to where it is now, if we can just fast forward through this graph, it's actually going to blow your mind. This is us going through time essentially at this point, and we can see how good of a stock it actually is. Now, when we look at their dividend, they tend to up their dividend once roughly every year. We can see November it was raised, November it was raised again, November it was raised. So generally every November they raise their dividend. And then if we go back 10 roughly years and we go back to November of 2011, it was 29 cents. Now it's 53 cents. Which is roughly 83% increase in dividends over a 10-year period. And then if we look at their earnings and their financials over the past little while, we can see that they obviously had a missed quarter, they've had a meat quarter, an okay quarter, and then they've had 2 beats. However, they have been increasing revenue, and then 2020 was not a great earnings year for many companies, including Fortis, but 2019 was a fantastic earnings, which that's the profit. So overall, this is a fantastic long-term hold if you want to be buying individual stocks, which technically can be more riskier than buying something like an ETF, while still getting a good dividend of about 3.8% and getting consistent growth over that time with a potential future of electricity being just absolutely dominant, especially when it comes to electric cars over the next 5 to 10 years. This is going to be a very, very strong company for at least 10 years, probably even longer. I hope that you've enjoyed today's video. If you have, hit that like button, subscribe, and I'll see you guys again next time.